Thank you for staying with Benchmark. LMD columnist and market analyst Hasita Premaratne discusses the repercussions on the bourse as a result of Budget 2012. Here he is with Benchmark's Anushan Selvaraja.
Welcome to this week's edition of The Voice of Business. Joining me on the show is market analyst and LMD columnist Hasita Premaratne. Now, Hasita, Budget 2012 seems to have failed in providing a positive stimulus to the capital markets. Now, the ASPI and Milanka both fell drastically this year. Now, why was it such a damn squib, so to speak?
Yeah, I think there were multiple reasons for the market indices to come down. But of course, having said that, if you look at the last 2 to 3 months, the investor confidence, which was gradually coming down over the last maybe 9 months, has got a little more worsened, and as a result probably the investors are more in an anxious mode and kind of in a wait and see approach. But if you look at the broader reasons, one reason you can say is that the globally there is a lot of uncertainty that is creeping up in the global economy and in the financial market, so the resultant effect of that is also seen in the Sri Lankan market, though it's not very big. Secondly, you can see the credit related issue in the Colombo Stock Exchange, where the broker credit related issue and the regulators regulatory changes relating to that episode was hanging for some time, and there was a certain amount of relaxations, etc., that were happening. So I think that process and that whole episode did create a passage of uncertainty and also gave a negative sentiment towards the overall investor confidence. And thirdly, if you look at some of the earnings that are coming out in the last 2 to 3 quarters, I think they are positive, the growth is seen, but selected sectors, some of the expected levels of growth may not be seen. Combination of reasons that are currently affecting, but I think that also need a kind of a fresh infusion of cash into the market, and some of the investors may have to look at, particularly the bigger investors, to take a stock on the fundamental values and start investing on a very selective basis rather than just investing on the whole index.
Now, you've said in your column in LMD that the budget has many positive initiatives, but that it also has a few proposals that signal adverse policy, which could lead to negative investor sentiment. Could you elaborate on this, Hasita?
Yeah, I think while there were quite a few interesting and positive proposals, one of the things that hurt particularly the investor sentiment was the way the rupee depreciation was made or devaluation was announced in the budget proposals. There was a 3% devaluation that was kind of put out, and I think fundamentally speaking, anyway, if the market had been let the way it had gone, or it should go, kind of, if it had been allowed to move in that direction, it would have anyway gone into these levels, or if not a little more. But of course, coming out in a budget document, a devaluation was a little bit of a negative impact on the overall investor confidence. I would say that's a negative aspect from an investor perspective.
Now, some would say that the 2012 budget is export friendly when compared to last year. Could you tell us why this is perceived as such?
I think the last year budget was predominantly importer friendly, because not that there were any specific proposals as such, but then some of the duty waivers were helping the importers on one side. On the other side, there was a rupee that was on a appreciating mode, which hurt the exporters during the previous year. So that situation seemed to have been arrested in this budget, and the fact that there has to be some level of correction or a reality check in the exchange rate was brought in, though it may not be the best way to do it through a budget proposal, but it came out. So that rupee depreciation will definitely help the exporters on one side. On the other hand, I think that another very interesting but a more long-term proposal is the fact that the budget highlighted the need to identify new export markets and focus on those markets, and some of the, I assume that the government policy framework and the authorities will take steps in initiating some of these market development activities, so that the private sector together with the public sector can create a road network to move towards that. Because at the end of the day, what is important is that private sector take the initiative and drive it, but there will be some policy frameworks like the free trade agreements, FTAs, which can be created with some of the developing and emerging economies.
That was Hasita Premaratne in conversation with Anushan Selvaraja. Thank you for your company. We hope you enjoyed the show. See you again next week.